You know, when folks are talking about the competitive advantages of Tesla over virtually any other, well, not just virtually, over every other single car available on the market today, they commonly leave out the incredible software in Tesla, especially the over-the-air updates capability. Well, there's a fabulous new feature that's going to make your car a lot better. According to Tesla themselves on X today, software update number 2024.20 is rolling out now, and it highlights headlights adapt for curves. Headlights now adapt for curves in the road ahead of you. Adaptive headlights improvements, vehicles with matrix LED headlights. Headlights adapt for curves in the road ahead and also illuminate more when you're driving into your driveway. Okay, I've already been noticing, I've always thought that, high beams were a real pain. Where do you put it? Do you put it on the floor? Do you put it on the stalk? Where do you put the high beams? And then do you forget to turn them off when somebody's coming the other way? Or is it okay to do your high beams when it's a divided highway? All these kind of things kind of get in your way. Well, now, I don't know if you've noticed, but even before this update, your high beams were all automatic. They took care of that quite nicely for you. Didn't have to think about it. And now, even better, it's going to be adaptive in terms of directionality, in terms of brightness. Wow, I mean, it's just amazing. Anyway, now this is almost as amazing. Jim Cramer has thrown down the gauntlet. He says it's time for Elon Musk to come on Man Money on CNBC to state his case. Now, he doesn't say which case. Elon is currently being involved in so many different lawsuits that it's hard to know which case he's talking about. I'd like to see Elon go on and just make the case for robotaxis or potentially for the general idea of electric battery storage combined with solar as the future. There's so many cases he could make. Anyway, I suspect he might be talking about the pay package. Maybe, I don't know, but Elon says he's up for it. He suggested, though, that it take place where? On X Spaces, of course. This from Sawyer Merritt. He says, the news, TJ Connolly, Tesla, charging program manager and business development lead of North America, was recently asked to return to the Tesla charging team. He states as he is back on the job, I assure you that the EV charging industry is okay. Tesla will continue to lead and inspire while providing the best customer experience with our best-in-class products and support. Okay, this is a little bit of a long read here, but I think it's important. In fact, there's going to be an even longer read later that's even more important. But for now, let's take a look at what Piper Sandler had to say today about the upcoming vote. Now, I know you've already made up your mind, but it's always good to have some of this information, even if you've made up your mind. Our recent Tesla-related conversations have not focused on modeling. This is because in the immediate term, everyone seems focused on the shareholder meeting, June 13. If shareholders vote in favor of the board's recommendation, we think Tesla will trade sideways at worst. Some think it'll go up a bit. If the inverse occurs, then we think the stock price would fall. But with 40% retail ownership and with many institutions of both the yay and nay camps, we're not sure what will happen. To control risk, we'll be basically equal weighted ahead of the vote. There you go. They're going to put their money where their mouth is, not do anything. Looking beyond June, we think a rising focus on AI will support our overweight rating. In the meantime, we're cutting our forecast for deliveries, but boosting our outlook for margins. Okay. These changes are offsetting each other, and our price target remains $205. In our view, if the board's proposals are rejected, Tesla's share price could fall. Given that, we're not sure why shareholders would vote against the idea. Then again, the vote is now politicized, and in politics, emotions override reason. We haven't polled shareholders, and to us, guessing about the vote feels like gambling. Agreed. If Tesla were in our benchmark, we'd try to avoid making a call on the vote result. Redeliveries. We are modestly reducing our forecast for 2024 and 25. Market share has fallen in the US and EU, page 2 of this report, largely due to shutdowns in quarter 1. Deliveries should rise quarter over quarter through fourth quarter 2024, but after that, we're not sure if growth is a priority. Our guarded delivery outlook may prove overdone. In other words, they're going to probably undershoot it, pending details from the event on 8/8. News profitability is more optimistic. Prices and wait times have stabilized. Widespread layoffs, 10% of the workforce should reduce OPEX and boost EBITDA, or EBIT, actually. Warranty expenses is another less well-publicized tailwind for gross margin. It's been talked about on this channel, but yes, they're undershooting, they're setting aside too much money for warranties. At some point, they're going to have to correct that. After 8/8, we think the focus will shift more specifically and explicitly towards AI, supporting our overweight rating, risk to achievement of price target and recommendation. Production delays, failure to meet customer expectation. Oh, I'm sorry. This is their risks to their thing. Production delays could happen. Failures to meet customer expectations could happen. Product defects and recalls, not so much because they're always over the air. And then supply chain disruptions, slow adoption of electric vehicles, et cetera, et cetera. So these are just general kinds of things that could be an issue. According to Eva Fox she goes by Eva Fox U on X, the Tesla Model 3 has once again proven its reliability and confirmed its status as a car that pleases owners. According to a study in China, Model 3 is the car with the fewest complaints, challenging players in the world's largest auto market. All right. Well, this is Randy Kirk. And if you haven't hit the like button yet, you know what to do. Subscribe and notify. Brian White was on earlier today. We'll be on again tomorrow. That recording is already done, and it's a good one. So you want to make the notify so you'll see that program tomorrow, as well as, of course, after the bell and then Nicholas Gibbs in the afternoon, in California time, at least afternoon. We also would encourage you, we'd invite you, possibly, would you consider doing a Patreon investment? $3 a month would be a great help, but $5 is even better. And then you get a free book, and $10 is even better. Then you get 2 free books or a Cybertruck bottle opener. Do you know you can still buy Cybertruck bottle openers? Yes, $25 for one. You know the rest. It's down in the description. Okay, this is now we go to economic news. We got 2 stories, big stories. These are really important. I hope you're still with me. Market Watch, a July cut is in our baseline, said Steve Englander, head of North American macro strategy at Standard Chartered Bank. So he believes that the Fed is going to cut in July. Economists at Citibank also forecast a July cut. While Fed speakers often talk about holding rates higher for longer, ultimately it's the data that drives Fed decision-making, according to Andrew Hollenhorst, chief economist at Citi. Hollenhorst thinks a weaker labor market will trigger a July rate cut to be followed by cuts at every one of the following 3 remaining Fed meetings in 2024. It's certainly, this is Randy speaking now, it is certainly true that the data could move the Fed to make a change in July, though I think it's extremely unlikely. We only have 2 PCEs between now and then. That'll be the end of June and the end of July. The one in July will be just before the Fed meeting on July 30th. I think that's not enough in terms of the inflation side to get the Fed to make a decision unless they were dramatically lower. It would not be something like down 1/10 or 0.1% comparatively. I'm not talking about being negative 0.1. I'm talking about being down from 3.7 to 3.6 or something along that line. So I think it's extremely unlikely. Much more likely is maybe the jobs data could be a reason rather than inflation data. However, we've got 2 jobs reports, one this week and one the first week of July. I don't think these 2 reports either are going to be enough to move the needle. So therefore, what's going to change things? I don't think housing's, a big reason why the numbers have stayed higher and the Fed hasn't been able to move. I don't see housing price, no evidence of housing prices coming down. In fact, every evidence that they're going up. Lots of evidence over the last couple of days that if you've been listening to this channel, I've been reporting on evidence that the business climate is a little maybe better, and that inflation on the supply side might be getting a little. Anyway, I don't see where it's going to come from. So July 30th would be the last hope, though. I don't think the Fed would want to give just even any kind of hint of bias by reducing the rate in September. A 25 basis point change in September, 2 months before the election, is unlikely to be seen as so material by the Fed. I mean, the Fed's going to sit there and go, will this 25 basis point change in September be so materially important to the future of the economy that we should risk the idea that we're taking some kind of position with regard to the election, rather than making that same, if we're still convinced that it's appropriate in a month and a half when the next opportunity comes in November after the election? No, they're not going to do that. I just don't see it. I don't think it's possible. What do you think? Let me know in the comments below, before, and after. Anyway, how about okay, this is a big, long article. I'm sorry, but it's going to be worth it, I think. Some of you don't like that I ever talk about anything political on here, but you've got to talk about the political stuff that affects the economy. There's no way to get around that. So on this one, this article from The Atlantic, which is obviously got a bias. The Atlantic Monthly has a huge bias, and this article has a huge bias. But The Atlantic, I will say, their journalism is outstanding. The depth of some of the articles that they do is outstanding. The writing is almost always outstanding. So take it for what it's worth. I've taken this article, not a lot of quotes here. I'm gonna kind of lay it out as best as I can, trying to be unbiased. Okay, so let me know how I did. Let me know in the comments. Did I manage to stay middle of the road here? I'm going to give my opinion, but did I manage to stay middle of the road in terms of not being biased about how I present the arguments? All right. It lays out the case for which POTUS would be the best for inflation over the next 4 years based on their stated positions. Okay, the debate is around tariffs, oil, independence of the Fed, immigration, regulations, and tax policies. All right, so let's take a look, and then you let me know how I did. All right, Fed independence. I thought this was the least likely of the policy approaches that Trump is likely to be able to even get into place. It would take a massive victory by Republicans to have any chance of getting a reform through Congress. Most Republicans who have any kind of a thoughtful position on the subject are much more likely to want the elimination of the Fed, not to give POTUS more control over the Fed. Would giving Trump more control over the Fed lead to more inflation? Okay. The singular argument made in the article is that Trump felt that the Fed was holding back the economy during his last term. So I guess the idea is that he would want the Fed to keep the money flowing and not raise interest rates. I don't think that would always be 100% true. I think Trump, just guessing, that if inflation was getting out of control, he would recognize the reality that you need to raise rates. So what do you think? Do you think that, Trump has made the claim that he wants more control over the Fed. There's no doubt about that. The question is whether he could actually get any more control over them, whether anybody, even the Republicans, want him to have more control, and or what that could mean, what it would mean in terms of inflation. I'm not sure that the argument was well made here in terms of how it would impact inflation. Okay, the huge influx of illegal immigrants might certainly be helping to keep inflation in check, especially during this recent 4 years, the 4 years that the president's been in office, when we saw so many leaving the workforce during the pandemic and then not returning. We got 7 million men and 3 million women of working age that are outside. They're not looking for work, and they're people that would have been looking for work. I just did a big article on that last week, or a big story on that last week. But will those trends continue to the point that reducing the flow would be potentially inflationary? Maybe. Is that a good reason to keep allowing lots of illegal immigration? I'll let you decide that. Not to me. Would it be a potential reason to increase legal immigration? I think that would absolutely be the case. And I think that most Republicans that I know, and I think that I've read, most Republicans are 100% in favor of legal immigration, increasing legal immigration. So reducing illegal immigration and increasing legal immigration, I think, would be the right method to use. But I think that Trump's position is that he would like to cut off immigration as much as possible at the border, and then he would like to return a bunch of folks. He would like to send a whole bunch of folks back to their native countries, wherever they came from. And then the argument about this in the article was that sending all those people back, sending a 1 million or 2 million people back very quickly, like in a weekend. Anyway, I don't know over what time period, but they made it sound like there would be thousands of millions of people rounded up and sent back quickly. First of all, that's just impossible. You got to find them. That's not, anyway, that's another argument. But the question is, would that be inflationary? I don't know. Maybe, probably. You think so? Let me know in the comments below. Yeah, okay. So Trump's idea would be seal the border completely. Don't let anybody in that's illegal. Not 1,000 a day, not 2,000 a day, not any a day. Any that could be apprehended and sent back would be that's how it would be handled. Those seeking asylum, that's a whole nother story for a whole nother day. That's a very difficult and interesting subject to take a very deep look at. But as far as people just coming in that have no reason or right to be here, I think that's an easy decision. Trump wants to open the spigots on oil and natural gas production. And I know many of you that probably are following Elon Musk and Tesla would like to see fossil fuels eliminated. I would like to see fossil fuels eliminated too. I have a very, unique maybe position on that. But I would be the first to admit that the production of gas and oil, gasoline, natural gas, those have all increased under Biden. We actually have record amounts of fossil fuels being produced right now. However, this is contrary to the position of the Democratic Party and to Biden. Their general policies is to cut back fossil fuels as much as possible to the point of zero, and to really push renewables. And I am my position. I don't like the Republican position on this of not pushing renewables. I'd like to push renewables as hard as possible, but I'd also like to continue to produce oil and natural gas as much as possible and let the market work it out over the next year, 10 years, 20 years, whatever it's going to take. Eventually, natural gas and oil will be gone or down to very small numbers, and it'll all be solar, nuclear, batteries, etc., or something new that we don't even know yet. It may not even be, it may be still being in the lab right now. Anyway, so will it be more inflationary though? Which would be more inflationary? A policy of all of the above, continuing to maximize oil and natural gas production in the United States, and continuing to provide lots and lots of additional energy resources, not getting in the way at least of solar and energy? Or would it be more which one's going to be better in terms of inflation and deflation? Or would it be better to restrict fossil fuels and then really push harder on the renewables? Now, in the long term, I don't think there's any question. In the long term, 20 years from now, yes. Even maybe 5 years from now or 10 years from now, it would be better to be pushing the renewables and not the fossil fuels. What about the next 4 years, though? Would we have to go through a tremendous amount of pain if we dramatically restrict fossil fuels? I don't think it's going to happen. I don't even think it's an issue, because I just don't think there's any way to do that politically. By the Democrats, I think they found that they couldn't do it. It was politically too hard to do. What about taxes? Well, Trump wants to keep his tax cuts from the last term in place after the sunset provision, and then he wants to cut taxes even more. Biden wants to let the Trump era cuts expire and then add new taxes, mostly on the very wealthy, people that are probably even wealthier than you. There's an ongoing debate as to dynamic results of tax cuts compared to the static results of, tax policy. So in other words, you have the immediate result. If you increase taxes, the immediate result should be that the Treasury gets more money, the deficit goes down, and that's all good for inflation. How about the non-static or the dynamic result? Does it improve the economy to the point where more tax revenues are collected because the taxes go down overall? And also there's less cheating or efforts to not just cheat, but actually move resources to where it's not taxed in the United States. So that's the argument. That argument goes on and on. We're not going to decide that argument today. The question right now would be, which would be more inflationary over the next 4 years, a tax cut or a tax increase? And holding on to the Trump era tax cuts that are already there, or letting them sunset. There you go. Which one is going to make the best? Which one's going to be best for the federal debt? Which is going to be the best for inflation? All right. Regulations are believed by conservatives to reduce productivity. I'm not sure, but I'll posit that liberals feel that some regulations might improve productivity. I might even think that that's true, but that whether or not they improve or hurt productivity, more regulation is almost always better. That might be a little strong. Let me say it a little more balanced, that some regulations are critical even if it is going to reduce productivity. All right. One thing we can almost be certain of is that Biden will continue to increase regulation and Trump will start slashing anything he can find to slash on day one. Do you agree with that? Is that balanced? I think it's balanced. I really do. I mean, that's what he did last time. I think that's what he'll do this time. And Biden has shown, it's definitely a Democratic approach to increase regulation. Which one of those do you think will be better or worse for inflation? Okay, then there's tariffs. And this is kind of where the article started. I'm showing it last because I think it might be the least important. Tariffs. Okay, remember that tariffs are only going to impact imported products. Now, they could affect exported products, because if you raise tariffs, then the other country might raise tariffs on your products. So if that happens, then you might not export as much, you may not produce as much. So there's always these, what would you call it, secondary and tertiary effects that are not necessarily just in the original intent. So tariffs tend to be for the purpose of protecting your own labor force in country, and also of protecting certain industries which you consider to be strategic or critical to keep onshore rather than allowing to go offshore. All right, so Biden didn't do anything. I mean, as you know, Trump spent a lot of time during his first 3 years working with pretty much every sector of the world to figure out new arrangements, new agreements with regard to tariffs and with regard to duties and things that nature. And the result was that there was much higher tariffs, especially from China, but also higher tariffs in other places as well, including even the North American Treaty. Well, Biden, I don't think did much. I don't think he changed. Can you remember? Let me know in the comments below if there was something I'm not thinking of that was really consequential in terms of changing tariffs until about a few weeks ago, or maybe just last week. Biden has all of a sudden dramatically increased tariffs. Now, let me know in the comments below. Do you think that that's political? Do you think that that's something that he's doing going into the election? Is that's why? Or not? Or do you think it was because he thinks it was the right thing to do at this time? But the tariffs that were increased were on, I think, again, I should go back and double and triple check some of this, but the first article that I read on it said that it was going to be on lithium-ion batteries, it was going to be on BEV cars, it was going to be on solar panels, it was going to be on steel, and it was going to be on aluminum. There might have been one or two other things like that. Anyway, and some of them were, though, dramatic. I mean, like going from a 25% duty on BEV cars, maybe on all cars. No, just BEV. Anyway, I think just electric cars to 100% duty on electric cars. Anyway, so that's what's happened recently. So now the question becomes, is there any difference between the two? Is Trump going to do anything differently on tariffs? Well, he said that he's going to increase tariffs across the board. In fact, he wants a 10% tariff on everything. okay, technically that would read just, again, first level, that would increase revenues, therefore decrease the US debt, and therefore be good for inflation. But on the other side of the coin, if you do a 10% tariff on everything, does every other country in the world that you have those tariffs on, say, okay, well, thank you very much. We're going to have a 10% tariff on you. And then that means that Americans are paying more for stuff that's coming from overseas, as well as maybe we don't export as much, which doesn't create as much revenue. You follow me? See how these things can become extremely complicated. Anyway, I think that I think Trump will be good to his word. I think he's going to really attempt to increase tariffs. But I also saw that last time he spent a lot of time negotiating those. So I suspect that this will not be like, okay, 10% across the board, I don't care, and just do it. I could be wrong. Which one of these policies do you think will affect inflation the most? All right, now we have a breaking news here. Just before I went on air, Biden is expected to announce tomorrow that he will, according to some headlines, seal the border. Seal the border. Others say that he's only going to do what would have been done in that package that was offered a while ago of sealing the border after 4,000 people a day or 40,000, I forget how many it was. After a certain number of people come across the border each day and get processed, then the border will be sealed for the rest of the day until the next day. So I don't know what he's going to say tomorrow. I guess we'll find out. If he says it tomorrow, we'll find out. But this would certainly, again, is this political? Well, we could say that it's maybe not political in that he was promoting such an idea. Oh, well, if it's only the 4,000 a day or whatever the number is, if that's all he's planning to do, then that would be equivalent to what he was offering 6 or 7 months ago. If he's going to seal the border entirely, I suspect that could be looked at as political. And then, what about in terms of now what the policy of the Democrats is with regard to the border? Is this a policy shift? Certainly looks like a policy shift. Why didn't he do it sooner? That's the big argument now that's going on everywhere. Let me know in the comments below, as with everything else. And again, I really, really am asking, was that balanced? Or did I my position. I'm a conservative. I don't kid anybody about that. But did I handle that in a balanced way? Or how do you think I could switch it up to be even more balanced on these issues that are, in fact, made issues that affect Tesla, issues that affect the economy, issues that affect Tesla stock, and issues that affect the stock market, which is what we do here on this channel. And so I don't care whether it's a hurricane affecting oil wells, or whether it's a decision to build a new factory. These are things that are what I got to report on this channel. I want to do it in a balanced way, except from time to time, I'm going to rant. It's going to happen. Okay. So what is going on? What happened today? Oh, what a sad day. Oh no, this is right. This is good news. Good news Monday. Well, the good news would be that Tesla was up 3.5 this morning. The not as good news is it ended up down 1.79. Now, what happened in between? Well, the market kind of got crushed. If you listened to my report this morning, you can go back and take a look if you didn't. I talked about the 3 reports that came out, the ISM. I'm going to forget all 3 of them. Anyways, there's 3 different reports that came out this morning. Oh, the construction money, how much money being spent on construction. And a third one, manufacturing, S&P and manufacturing numbers. All 3 of them were like a mixed bag, but most of them were saying that the economy is going along okay, although manufacturing may be down or it may be up. I mean, seriously. And that the incoming costs for raw materials by the manufacturers were increasing. Therefore, they were increasing their pricing, their selling price. That, I think, was the kind of little snippet that the market picked up on. And so the market got slammed, and Tesla followed it almost exactly. I mean, you can just watch the curve is almost identical. It just didn't quite recover as much at the end, so ended up down. So we've got the Dow Jones down 115 today, the NASDAQ up 93, almost 100% based on NVIDIA's increase today. S&P 500 up $5.89. I'm sorry, 5.89. And we've got, it's so hard not to see that as dollars. Apple was up. Most of the Magnificent Seven was up. Microsoft was also down, along with Tesla, also a small amount on a percentage basis. We've got, on the percentage basis, we do have the Dow was down 0.3, NASDAQ up 0.56, S&P up 0.11, and Tesla down 1%. All right, and in the after hours, Tesla is up a penny. So I would call that unch, wouldn't you? All right, thank you, Mr. Ferguson, Bradford Ferguson, for your determination of the word unch. I like it a lot. Okay, let's go in and take a look at the rest of the stuff. We have got, oh goodness, we have got bonds, the 30-year in the pre-market, down another 0.4 of a basis point. It was down strongly today. It's sitting at 4.39, under 4.4. That's quite amazing, given that the market seemed to be reaction to something that sounded inflationary. But it was down like 9 basis points today. I'm not sure exactly where it was before the pre-market, but something on that order. We have got the 2-year also exactly down 0.4 of a basis point in the pre-market at 4.814, and the 2-month up 3.2 basis points in the pre-market, is now over 100 basis points higher than the 10-year. What does it mean? Let me know in the comments below if you've read anything, seen any other articles on what this inversion means. What are we to take away from this 13, 14 months now of the inversion? All right, oil down another 17 cents, shockingly down to $74 one day after OPEC announced they will continue their production cuts all the way to the end of 2025, dropped like a rock today. Brent is unchanged in the pre-market. Natural gas down 0.07 after being up a lot today, sitting at 275. We got gold up $1.30, sitting at 2,370. Silver also up 0.25 in the pre-market, over $30 now, and copper up another 30.34%, moving back towards that $5 at 468. The dollar sinks to a 3-week low. And Bitcoin up 1150 at 68.8. It was up higher earlier today, getting very close to 70,000, but has fallen off a bit since then. The pre-market for equities, we have got the Dow down 11 more, or 0.03%. We've got the S&P basically unch at 0.50 up, or 0.01%, and the NASDAQ up 9.10 now at 0.05%. So not a lot of activity in the equities, pretty close to, I would say, unchanged going into tomorrow. All right, that's where we are. Again, please be reminded to go take a look at the Brian White video that we did earlier today. We talked about the different factories and what their real production capacity is. I really wanted to be sure that my numbers Sunday morning, where I talked about the production capabilities as well as what I expect to be the sales numbers and the profits. All of that was Sunday morning. I did a complete spreadsheet for the rest of this year, 2025 and 2026. That was all, just go back and look for Sunday morning's show. And then, so we talked about what he says, how close was I to the production numbers, and we came to pretty much the same conclusion, pretty close. In particular, I was interested in Austin because I think there's a lot of confusion about what the production capacity is at Austin. And we talked about the future. When is there going to be more factories? Are we getting anywhere close to starting the second half of Berlin? Are we getting anywhere close to starting Mexico? What in the world is happening in India? We need to start building some factories, or we're not going to have an ability to continue to increase the number at anywhere close to the numbers Elon has talked about in the past. Okay, I am done with you. Please find the card for the Brian White video. Please check in tomorrow for Brian White video again, unless something interrupts in the meantime. It has been great talking to you.